Hello, everybody. Andy Jacob here with the .com magazine Entrepreneur Spotlight Series. You know, when you watch the show, we like to bring leaders in their particular space on the show. And whenever we can book someone that's really leading the pack in their particular area of expertise, we try and book it right away because there's so much going on in today's world that when you can get an expert on the show that really can unpack a certain aspect of the world, we love to invite them. And of course, Mr. Mark Anderson came across our desk very recently. And as soon as we heard what he did, it resonated for me personally because I have some friends of mine that actually got involved in what he helps people unwind. And it's a very interesting business that he has. The name of his company is called Consumer Consulting Group. And we're going to talk about it. We're going to bring him in to sort of do a deep dive on what this is all about. But to give you a little hint, a lot of people get involved in timeshares. And this really resonated for me personally because I have a couple friends of mine that got involved with timeshares. And a couple of years ago, they reached out to me and they said, Andy, how do we get out of this thing? And to be honest with you, at the time, I really didn't know. But Mark's team are really experts at not only canceling and transferring timeshares, but consulting with people that get involved with timeshares on how they need to take action steps to relieve themselves from the pressure, if they're feeling that, from the timeshare contract. So Mark, welcome to the .com magazine Entrepreneur Spotlight Series today.
Oh, thank you.
Yeah, it's great to have you. You're one of the leaders in this space. You've helped so many people with their contracts, with their transfers, with their cancellations. And I have so many questions, and a couple of the people that knew that I was bringing you on the show, they said, Andy, you can ask these questions as well. So I have a few extra questions for you. But before we get started, of course, let's pull the lens back to 30,000 feet. Tell us about Consumer Consulting Group, and then we're going to get into it.
Sure. Consumer Consulting Group, we're a consumer protection firm. We focus on our niche is timeshares. So as people have them reporting on credit, there's debt collectors, there's mortgages that the interest rates are astronomical. There needs to be a group of individuals that are experts in all those areas that can really fight for the client and eliminate this debt, reputation, reporting, and get a peace of mind, really, at the end of the day.
Yeah, I love it. We want to get into all that. And it's very interesting because a lot of people that buy into timeshares, I mean, they're a lot of them are CEOs and high-level executives, and we have judges and even attorneys and accountants that buy into them. And then after a while, perhaps they want to move out and they have to figure out how to do that. That's why they reach out to you. Now, let's talk about it. Before we talk about sort of canceling or getting out of it, let's talk about getting into it. What exactly is a timeshare? What's the attraction for people to sign up for it? And then we'll get into how you get them out of it.
Sure. So timeshares are, as what they're explained, it's time that's shared between allotted points or properties. And they're sold on that they have this invested value, this certain week or multiple weeks that they have every year. And so it's, instead of wasting money on hotels, they have the savings by prepaying. However, the value does not offset it. Or if you're not using it, your fees continue to rise. We have hurricanes coming through and there's assessments that are going to hit people with Florida timeshares. And so they get sold that, hey, you're going to get a deed and you're going to have this increasing value. And if you don't want it, you can sell it. Unfortunately, most of those are not true or extremely difficult.
Yeah, it's interesting. And of course, they've got it down to a science. I mean, their sales cycle is incredible. For the people watching the show, you know we talk about sales cycles, and certainly timeshares for some people are fantastic and they love it and they go and they enjoy it and their family goes. I mean, it's not something that is bad. It's just something that needs to be right for the right kind of person. And they have a pretty intricate sales cycle when they bring people in, they show them the timeshares, they have turnovers and salespeople, and they really got it down to a science. And by the time you're done, you're signing on the dotted line. And again, for some people, it's fantastic. For some people I know, they work out really well. The timeshare companies are fabulous. They do a great job. But for others, they get down the road a little bit. And like you said, in Florida, you're potentially looking at some hurricanes. There's some additional assessments. There's some more money that needs to be spent. Maybe people's lives change that they can't get to the timeshare as often as they thought they would. And every single month, that money comes out of their account automatically. So let's talk about it. So the people reach out to CCG. I'll call it Consumer Consulting Group, CCG. You call it the CCG team, which I like. What's that first conversation sound like with people that say, hey, we heard about it. It's not what we expected. We want to sort of get out of it. What does that conversation sound like?
Absolutely. Great. So we offer a free consultation. And when a potential customer calls in, we want to hear your story. We want to hear what happened, whether it is something that was unwanted at the beginning or it just doesn't fit your lifestyle now. So once we are able to identify if you're really a good fit for us, because like you were just saying, there's a majority of timeshares that love it. It works for them. Then there's another part that shouldn't have been there in the first place, or life changes. So they go and have a free consultation. We explain our process. We explain about our monitoring, our tracking, our case managers, our legal teams, and how we're going to get you out, how long it's going to take, what the cost would be, and then our warranties that go along with it. It's probably about maybe between 15 and 25 minutes to really encompass everything, but it's depending on how many questions you do ask.
Yeah, so you do the free consultation. And Mark, something that I find very interesting, we talked about this pre-interview, was the fact that people that sign up for timeshares, many of them, when they're trying to get out, and maybe perhaps they can't get out or life changes, they almost feel a little embarrassed that they signed up in the first place. And that embarrassment sometimes leads them to say to themselves, I don't even want to let anybody know that I did this. So let's talk about that. How important is your team's confidentiality? How important is the conversation? What types of people sort of reach out to you and say, hey, I want out?
Absolutely. So there is a portion of this where a lot of people don't want to have that exposure. They don't want their friends, family, maybe their profession to know that, hey, they may have got duped in this. There's a certain set of people that say, I would never buy a timeshare. And then, bam, they're the ones that ended up getting it. So we're not going to share information. We also have people that are ending relationships with people, and we have to have a confidentiality. There has to be trust. If there isn't trust, then we're not in it to really help you, and you're not going to want to do business with us. So we keep everything private, and we deal direct with the resorts. We deal direct with the credit agencies and the debt collectors to protect you and your reputation as much and as humanly as possible.
All right, I love it. Now let's get into the weeds a little bit. For the people watching the show, I love to get into the weeds when I have an expert like Mark on the show. So what does it really look like? Somebody reaches out, you do the 20, 25 minute, free consultation. They tell you that they want some help. How long does this process take for you and your team to get your clients to where they want to be based on their objectives of the first phone call?
Sure. So we have two different types of clients, ones that are still under financing, meaning they have a monthly payment, a mortgage, and then ones that are just maintenance fees, either annual or biannual. Two somewhat different processes. One is negotiating due to maybe deception, hardships, or the interest rates were wrong, or life changes. I'm speaking about the finance version. That's about 9 to 14 months. That's our average turnaround time. We've had some of them sooner. We've had some of them longer, but that's a good average. Now, the other ones that are paid off maintenance fees only, it's a much smoother and quicker process. We have to follow the first right of refusal, which is in their contract, meaning we have to offer it to the resort first, say, do you want it? Do you not want it? And based on those responses, we do an estoppel letter, which is the clearing of the title. And then we begin either a transfer process or we're negotiating to settle out all remaining fees if you're defaulted and just close it out and either give it back to the resort, or we have some other areas that people will take them.
Yeah, very interesting when we think about it. And again, this is a deeper dive than most people would take, but I'm just sort of curious because one of the things, Mark, that when people sign up, the way that I understand it from speaking to people that have actually done it, is there's this idea that it's a liquid asset. It's this idea that you can sell it. It's this idea that it increases in value, perhaps. They don't guarantee it, of course, but there's this idea that when you walk away, you have this asset that it's easy to sell, let's say, on the secondary market. And what I understand is it's not that easy to sell on the secondary market. What's the story with all that?
So a timeshare is really a private membership. Applying the deed or the title allows foreclosure ability. So a lot of times when you have a title, you're like, yes, I have property. I can sell it. I can rent it. I can change the paint on the door, the keys to the front. I can sell it whenever I want to. However, you're in a membership and you're not in property. So that's one of the biggest areas of where the inherent value isn't really there. How can you put value on a membership?
Yeah, that's interesting, of course. And then people start to understand that a little bit more fully. Now, if there is finance, if there is a mortgage, you mentioned mortgage, and of course, those mortgage rates are going up now. It takes about 9 to 14 months for your team to sort of work its way through. Sure. And how close do you work with your clients? Do you have them on a platform? Do they get emails and phone calls with regard to the progress that your team, who's well known for the progress, is making? How do you let them know where they're at in the process?
Great question. So we have an online client portal. So our clients can log in 24 hours a day, see what's going on with the case, disputes, responses, as well as the credit side, see all 3 of their credit scores. They get a full pull it's a soft pull every month. So they're able to see that along with identity theft insurance coverage. So, and then usually about every 35 to 40 days, they get a call from their case manager to let them know what's going on, as well as if anything they've received, as in the client, in the mail or any type of correspondence, to forward that back to us, because that can dictate certain stages of it.
Yeah, that's interesting. Of course, then you have the second sort of tranche of people that have the maintenance fees. Sure. Now, in this particular case, it sounds like that financing arm, that financing component, that mortgage has been fulfilled, but yet they still have the maintenance fees. Now, for those people that just have the maintenance fees, it's a little confusing. So I want to clarify this. They're paying maintenance fees every month, or maybe, every other month, or maybe quarterly. Why would they want to get out of that? Because it seems like the mortgage has already been paid, and they have this unit that's theirs for 1 or 2 weeks or whatever it is based on the contract, and all they're paying is the maintenance fees. Are the maintenance fees just too much for some people to handle, and they're just tired of it, and they're like, I'm going to take the loss on the mortgage part and I just want out of this thing? Like, what's the reason why people that are just paying the maintenance fees want out?
Sure. Well, the maintenance fees increase either annually or even biannually. So they're never going to stay the same. And a lot of times you may not have a deed or a fixed week. You may have points. So just like a cell phone, you need to keep upgrading to stay relevant in technology. You'll have to stay relevant in the timeshare world. So you have a $1,200 a year maintenance this year, then you have a $1,280 next, then $1,400 following, $1,600, and it goes on for the rest of your life. And then it attaches to your estate and goes on to the next round of your heirs. And this includes the continuing of these fees. Assessments come along with that. So if you're not using it, yes, you paid your mortgage off, but now you have maintenance fees. And if you're not using it, you're just wasting thousands and thousands of dollars for the rest of your life and going into your estate. Sometimes stopping the bleeding is what's necessary. And because the maintenance fee at the end of the day, if you're not using it, you're getting zero value for your dollar, what you're paying.
Wow. It's almost like a condo association. So you pay your mortgage off, you keep paying the association fees. They keep going up every year. Some of them go up at a higher rate than even inflation, depending on what the board of the condo says. Mm-hmm. Then there's assessments because they have to fix the elevator, fix the floors. And in these units, it's the same thing. So you have to pay your portion of the added expense, and they add that on. Mm-hmm. You get a letter or an email that says, hey, Mr. Jones or Mr. Smith or Mr. Jacob or, Mr. Anderson, we have a little news for you. Your maintenance fees have just increased again for the next 12 months. And that's when people say, enough is enough. I need to stop the bleeding. I need to reach out to Mark and his team, because the value that I'm receiving for this expense is just not worth it to me in my life at this point in time. So I got to get out of this thing. Now, let's talk about your team, because, CCG team, I mean, you're known as leaders in the space, and also you have a great team that really care about your clients. How important as an entrepreneur, Mark, is your team to the success of what you do, as the timeshare cancellation experts?
Sure. I mean, it's vital. No one in my staff has come from the area of selling timeshares. They all come from risk management. We have paralegals. We have credit managers, risk managers, titling agents. And so taking their specific expertise in their industries, coming together as a financial and a consumer protection firm, we're able to allocate their strengths and get the job done as quick as humanly possible. Because you do have team members that are real articulate in one area and not so strong as another, but together we're a force to be reckoned with. That's for sure. In fact, we even put warranties and guarantees on our service that, if I don't get you out of your timeshare, you're not going to pay anything. We also have our financing side where there isn't any upfront costs on some of our signups. So it's we really back our service, and you see it with your online portal 24/7. So you see the work being done, you see your credit improving, you see the debt eliminating, the calls going away, and that maintenance bill is gone.
Yeah, it's great. And of course, you mentioned a membership.
Sure.
So you mentioned that when you buy into the timeshare, again, and I'm just prefacing this for the people watching the show, not all timeshares are bad. There's a lot of people that love them, that use them, they enjoy it. It's multi-generational, it's an opportunity. And, for people that use it, it could be a phenomenal thing to do. But you mentioned a membership. Who actually owns the title? So if I sign up for a membership and I buy into a couple weeks down in Orlando for, every year, who owns the title? Does the title stay with the timeshare company, or do I get a piece of the title? How does all that work?
Well, they kind of call it like fractional real estate. They kind of like their terminology with it. But the timeshare company owns the building. They own the resort, the facilities, and they parcel off time, weeks. And so you're not the owner of that unit, that building, but you're the owner of that time, given you have a fixed week. Now, you could have a title and not have a fixed week, which means you float. You could have the first week of the year, the last week, and now it's not guaranteed. The only timeshare owners that are guaranteed a vacation is ones with fixed weeks. So if you're points or you're a floating week, you are paying for a timeshare where they don't have to honor a vacation.
Yeah, so interesting for the people watching the show, and that for the people that watch the show all the time when we drop these great new interviews. We love commercial. We love commercial real estate. We find it fascinating, especially what's happening in the big cities today. We talk about some doom loops and things like that. For the owners of the timeshare, they've got a building. Let's just say they've got a big building and it's filled with a bunch of units. Mm-hmm. Do they have the right to sell that building and then sort of stop the timeshares, or do they not have the right to sell the building if somebody makes a great offer on the building?
Sure. So these timeshare companies are among other, resort networks. So let's say your building burns down. They would just allocate another home location. So now they have a building, great investment for them. The area is booming, and they say, I'm going to sell this resort off or this unit. You won't receive any proceeds. They're just going to allocate your home location somewhere else. So your ownership title is basically a tether saying you are responsible for the taxes and fees and assessments, but you share zero of the proceeds if we decide to sell this.
Wow. They've thought of everything. I mean,
Yeah,
that's wild. So here you are, you're going to the same timeshare, for 15 years, you have your babies and you raise them at the timeshare. In this case, we're going to use the Orlando example. You get used to it, you know it inside and out. You show up for 15 years, your kids are now teenagers, and then all of a sudden they drop an email to you or a letter saying, oh, by the way, we sold the building, so now you're going to be going up the street, or is there a certain number of miles away that they can place you, or can they place you anywhere?
Well, the question isn't necessarily like the distance. It's going to be, does your current contract have enough of points, equity, or whichever to be qualified to go to the next place? And now the upgrade is starting to happen. So they don't want to keep you in maintenance fees only. They want to bring you into the next level, like upgrading the cell phone. So Mr. and Mrs. Timeshare owner, yes, you've been an owner with us for 15 years. Yes, you've had this great location. However, this unit's going away, but you don't qualify for our new presidential whatever, and you're going to have to upgrade, and it's only X amount of dollars.
Wow. The upgrade, the upsell. I mean,
Yes.
It happens. So there you are, 15 years in this case. We're doing sort of a use case together.
Mm-hmm.
It's made
If
up.
you're
It's
not
make
upgrading, in fact, if you're not upgrading, you're going to end up weeding yourself out of timeshare. It's a luxury item. So it's purchase, upgrade, just to stay relevant.
Got it. Down payments. Let's talk about that a little bit. Most of these timeshares, when you get in, you have to drop a down payment down, right?
Most of the time, or they'll do a sponsor credit card. So they'll have like a Barclays credit card or an awards MasterCard. But generally, yes, you're going to have to put down a down payment.
Got it. Let's talk about the conversation. The percentages. Are most people reaching out to you, Mark, because they want help with the mortgage 9 to 14 months out, they want to eliminate it, or are they in the maintenance fee increase nightmare? Is there a percentage of people that reach out to CCG in both cases?
I would say probably about 60% of our clients have a mortgage. They got into the timeshare. They either really weren't credit qualified to begin with, so the timeshare kept it in-house, or their life changes, things come more expensive, or they look down at the financial disclosure page and they realize that the interest rate or the finance fees are double their purchase price. And so that is what really hits home for a lot of people going, I bought the timeshare for $18,000, but with interest and fees, I'm going to spend $42,000 for this. It's not cost effective. But then when they call to ask, hey, is there something I can do, a hardship, or can I give it back? Can I sell it back? And they say, I'm sorry, you signed up. You're in it to win it now for the next 120 payments and for the next 30 to 40 years of your life.
Yeah, it's really interesting, Mark. Before I let you go, I want to have you put the other hat on for a minute, because I don't want this interview to come off like we're the timeshare killers.
Sure.
I think that there are circumstances in people's lives where this works. So put the other hat on for a minute. Let's not be the timeshare killer just for a minute. Let's be the timeshare powerhouse where you share with the group of people that are watching the show why timeshares are good, and then we're going to reverse engineer it.
Sure. So like you're saying, timeshares are, fit a lot of people. I'll give you a scenario. I'm a father and I have 4 kids, and I'm going to go travel to, let's say, Disney or Orlando. Not many hotels are going to be able to accommodate me a similar location like my home, or maybe I can't afford a penthouse suite, but I could go to a timeshare resort and get a 4-bedroom lock off. And if I do it right and I purchase a fixed week and not get points, I know I'll have that lock off every year. So now I can bring my kids. I have the little living room. I got the kitchen. I can go buy some groceries, put it in there. I have 4 bedrooms. Well, you're not going to find that at a lot of just general hotels. You're going to go to Holiday Inns and Budget Inns or wherever else you're going to go. So for those people, having that and having the consistent place and generally consistent quality, they know what they're going to get. The people that cheapen it or go for the greed of the purchase of the timeshare and don't really look at what they're buying, that's the ones that get, wait a minute, I don't have this. I have this little 1-bedroom. I get no tickets for anything. My fees are way more than the 4-bedroom walk-off guy. And that's those people that I really deal with. The people that have had it, that really enjoy it, I'm happy. I'm glad you're enjoying it. I mean, this is the number one industry in hospitality, the number one industry in Florida. So somebody has to be doing something right. Yeah. And so they do deliver good service. However, for the people that were maybe misled, out of budget, sometimes it's self done. There needs to be a solution, and we're that because the timeshare doesn't offer one.
Yeah, Mark, that's really interesting. I think variety is good for life. So again, getting a little deeper, because I don't really know the business and know the industry like you do. And a lot of our people watching the show, they might want to ask this question is, I get locked in somehow to a timeshare. Do I have a chance to say, hey, I don't want to go to Orlando this year. I want to go to Clearwater Beach, or I want to go to Miami, Florida, and then I get to pick another timeshare as part of my contract? Or does that depend on the contract that you sign?
It will depend on your developer. Some are in different exchanges. If you're with one of the larger developers, the Hiltons, Blue Greens, and such, they have resorts all over the place. So you would have to just reserve over there or transfer. It may come with a fee, but you can move around on different locations, long as you have the qualified contract points or week or whichever. But yes, you can move.
I love it. I mean, here you go. I mean, you're a leader in the space. You're doing a great job and a great service for your clientele who are reaching out. Before I let you go, I know you're doing so much work right now. It's a burgeoning business. A lot of people reaching out. I want to talk about entrepreneurship because you've got this team. You're doing something in a very specific niche that you've learned inside and out and have become a leader. For the people that are younger entrepreneurs, maybe they're having a tough time. Maybe they're freezing in the frame a little bit. Maybe they don't know what to do. Maybe you can share some insight, Mark, about what it takes to keep on pushing as an entrepreneur when times get tough.
Sure. My entire career, I've always been a researcher. So whether I found something that someone was doing successfully, whether it was a competitor, an industry, or my own, I researched it front to back. But that takes a certain level of dedication. That takes a certain level of desire to really want to have it happen. You want to be a winner. You want to provide the greatest service, the best you can. I have a lot of pride in what I do, and I treat all my clients as though I would want to be treated. The worst thing would happen is if for someone, a client of ours, was mishandled or mistreated, we would almost take that personally, just due to the fact is that's how much energy that I put into it and my team puts into it. As an entrepreneur, you cannot do everything halfway. It has to be all the way, and you really have to be dedicated to it. You have to go the next step, the research, to find out how and why and when, and then do it. And that's how I've been successful, and that's how I would recommend everyone else.
Yeah, I love it. And you mentioned research. You have some great posts, some great articles on your website. You're very prolific in trying to get information out to people. So for people interested in this, of course, check Mark out. Check the CCG team out because they're doing a great job, and they're there to answer your question. Take him up on his offer. I mean, here we go, a free opportunity to speak to an expert about your particular situation, and you're going to get what I call the straight shot from Mark and his team. And wow, I want to thank you so much, Mark, for coming on the .com Magazine Entrepreneur Spotlight Series today. I had so many questions about this, and you really cleared it up. You really helped me understand it. And for those people watching the show, I hope that your journey in the timeshare space has been wonderful, and that you're using it, and that you're taking advantage of some of the great resorts that some of these amazing timeshare companies offer. But on the other hand, if you're at the end of your line, if you're at the end of your time, and you are either in a mortgage or maybe getting those maintenance fees that keep on increasing, reach out to Mark and his team. I think you'll get some sage advice and listen to what he and his team have to say, and then make a good decision. So Mark, thanks so much for coming on the .com Magazine Entrepreneur Spotlight Series today.
Thank you very much.